Welcome to Tradiers, the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. And I've been recently told by Bob Iaccino, with no sense of irony at all, that I'm short, skinny, lack any sort of muscle. And he said it like he wasn't even meaning to insult. It was just like in a conversation, like, yeah, you got to just, you got to deal with it. Which, by the way, he's short too, just to be clear.
I am. I think I'm only a quarter of an inch taller than you.
I think, yeah, right. You're only a quarter of an inch shorter than me. Right, exactly.
It allows me to call you short.
I think we measured and you were a quarter inch shorter than me. That's the way I remember it. And that's the way I'm taking it.
That's not exactly what it was.
Okay, whatever. Let's just move along. Let's agree to disagree and move along. Today, apparently, is a big day. Okay, so I talked to a wealth manager 2 days ago who had said to me he's getting shit ton of calls from the people he manages wealth for, either to de-risk or to add risk. And those calls were split 50-50, his words, 50-50 based on political affiliation. And you can guess who was selling and who was buying. Which, by the way, it could be deeper than that. It could be that they truly have this belief that fools are in charge and that you might as well get out. And they could be right. I don't think they are, but it seems odd to me. I think they're being wound up psychologically. It's terrible. Anyway, fast forward to today, we explode higher. One of the biggest days in years. I know you had the statistics on that. Yeah. Are we out of the woods yet or no?
No. So first of all, I think the reason we exploded as high as we did today is not necessarily the pause itself. It's the idea that the market got from the pause that, okay, it is what we thought it was, to quote Dennis Green. They are what we thought they were.
You had them and you let them off the hook. You want to crown him king, you go crown him king. That was a great rant. Sorry.
I mean, I think there was a split between, is Trump serious or is this a negotiating ploy? And it's clearly a negotiating ploy, clearly at this point. I think that's what caused the market to rally. Now, I said something in a commentary I do for a client today where I said the China front is still alive, right? The China front in the tariff war and the trade war is still hot, right? I mean, they're still lobbing bombs back and forth at each other. I think Trump said a few hours ago, 125% now on China. Kevin O'Leary, Mr. Wonderful, who in person is not that wonderful.
Yeah, I know too, yeah.
Yeah, he's not.
He's just okay, right?
He's calling for 400% tariffs on China, right?
Okay, so what's happened here is this is like an old Western, and the gunfight has happened, and 70 others have been shot and are lying on the old dusty road, and the United States and China are left staring at each other. This town ain't big enough for the both of us. So either we get a China capitulation, or we just go forward with trying to reroute supply chains outside of China. Which one's the more likely eventuality?
Well, I think actually our guest will have a better idea around that, but I just personally think that there will be a deal. I just think it's going to be a little bit of a wait with China. Okay. And that's why, certain things that happened today may not have been accurate, but I'd rather leave that for the conversation with Ed.
I've said this a million times. You guys have watched Bobby and I on TV for 25 years. You might think that we're idiots, but one thing you cannot deny is that we get great guests. This is another great guest. This is a guest you probably have not heard from. We discovered him through conversations on Twitter, and Twitter's such an amazing vehicle. All of a sudden, we're like, oh shit, this guy's smart. This guy knows a crap ton more about semiconductor and technology and things that go on within that realm than we do. Let's try to squeeze every ounce of knowledge from him. He is Ed McKernan, who is a 30-plus year. He said 30 year. I say bullshit because I know when he graduated from Marquette because my wife was 3 years younger than him. So I'm going to guess closer to 40-year veteran of the semiconductor and tech.
30-plus.
30-plus is fine. I just think it's a cop-out. Let's bring in Ed to defend himself. You it's 40. You just don't like the way 40 years sound. Is that correct?
Well, I had to get my MBA first before I went off to Intel land.
Okay. And, that actually makes sense then. So maybe it isn't quite 40 yet. Yeah.
I've always wondered how I got connected to you on Twitter, and all I can figure was for a while there, I was commenting to Jim Bianco, who graduated same year as I did at Marquette. We were on the same dorm floor, and all these people started connecting with each other. So I see your feed all the time.
That's awesome. I love it. And I love when, having discussions with you on the feed. I think it's a ton of fun. And for some background, Jim Bianco, 84 Marquette grad. No, he's a year younger than you, right?
He's 84 grad.
He's an 84 Marquette grad. My wife, the wonderful Peg, who I don't refer to as wife number one on Twitter anymore because some lady chewed me out at my restaurant once who I respected a lot. And I'm like, oh, it's a joke. It's a joke. But I don't refer to her as wife number one. She's a Marquette grad as well, too. Chicago, if you're not from Chicago, you might not know that much about Marquette except for the Warriors basketball team. But I'm telling you, they have a great, great network within the city of Chicago, and they are a fine, fine institution. Anyway, let's talk.
It's huge.
Let's talk tariffs.
I've been thinking a lot about the tariffs and China. Where I wanted to start was after I got my MBA, I went to work for Intel. This was 1989. And so my first job was in business development out in Asia, which was to get Intel Silicon into Taiwan, into the original guys who were building notebooks. And these guys back then were $100 million companies. They're now like $40 billion companies. One of the things people have to understand about when they talk about China and Foxconn building for Apple, all these companies, Foxconn, Quanta, and so forth, are really Taiwanese companies. They are not Chinese companies. And so the design effort happens in Taiwan in collaboration with Apple or Dell or whoever. And then they move the production over into China. In the last few years, they've been moving it out towards Vietnam and India. So China really doesn't have control over whether these guys move out, and they are starting to move out. Some of them have moved faster, like HP was 90% China back about 6 years ago. Now I think they're down to like 10%.
Wow.
Which they had set up a whole new city way out in Western China just for HP to put their printer group back in 2018. And by the time Trump implemented first tariffs in 2018, they started moving out. So it is a series of cuts that have been happening in China. So I think Trump's coming at this from several different ways. One is he definitely wants to move the supply chain out of China. He's going to get agreements with India and Vietnam and so forth. The second thing is I think he wants China to back off on Taiwan, as you hear a lot about China wanting to invade Taiwan and so forth. I actually think what Trump's going to do with the tariffs, he might turn it into a dimmer switch, moving it up and down based on whether China behaves or doesn't behave. And one of the behavior questions will be how they relate to Taiwan.
Interesting.
And whether they back off. To go back a little further into kind of the supply chain, it starts with TSMC in Taiwan making the wafers. They package them up, they sell them to NVIDIA, they sell them to Apple, and so forth. And you probably saw semiconductors had a 0% tariff on them. The issue is that Apple will take these chips, give them to Foxconn in China. They'll solder them on these very tiny boards, about the size of a couple sticks of gum. And then they package them up into an iPhone, and then they'll ship it back to the US. So a typical iPhone has about $400 worth of cost. And out of the $400, about $30, only about $30 is really value add by China to package it up. So one of the things I think, I'm sure Tim Cook has told this to Trump is, hey, my silicon's supposed to be tariff free, but you want to tariff my phone coming in from China at 100% or whatever, right? And I think that they're going to have to come to some agreement, customs agreement or whatever, where if Tim Cook's providing the silicon, that the tariff on his phones is not going to be 100%. It's not going to be 400 plus 400. It might be 100% on the $30 cost adder. And if he can do that in the near term, and Trump gives him a waiver to give him an extra couple of years to get the rest of the supply chain out, then I don't think Apple's going to be hit by earnings. And as you guys know, Apple's going to have their earnings coming up in a couple of weeks, and everybody's going to be pounding them on the tariff question.
So let me ask you this before I go into a question. First of all, I want to say that Tim McLean's in here as always, and he said he remembers Al McGuire, Marquette's old basketball coach. But I want to add to that is, you guys know who Travis Diener is?
Yes.
He married my cousin.
Really?
So yeah, so every once in a while, like, I see him at big family parties. He's pretty white, so he doesn't attend the Italian parties that are small. He reserves it for the ones he has to go to. And him and I are always in the corner, and he's like, how did you live like this? Because we're all loud and we're all this. And he's really kind of like a quiet guy. I remember him saying that, you know, I had a nephew who was trying to play basketball, and he's asking him for advice. And he's like, this kid goes out at night. I used to shoot 1,500 free throws a night and then go to bed.
A lot of commitment.
You know, that's what I used to do. Anyway, sidebar on that.
Well, every year he and Dwayne Wade have a drink-off contest at the Mecca. Or it's not the Mecca anymore. It's
Right. Yeah.
So anyway, back to the tech conversation. So based off of that, okay, based off of what you kind of just diagrammed out, do you see basically that there's going to be an absorption of this very small tariff that is perceived by the markets to be absolutely crushing? And then part two of that question would be, how important, based on what you just said, is the Chinese invasion of Taiwan? So they're two separate questions.
So yeah, let me go to the second one. I consider TSMC and NVIDIA the two most important companies in the world. If TSMC goes down, it's worse than COVID. You know, when they couldn't get chips to build cars, you won't have chips for anything, because TSMC produces the most chips in the world. They produce the most advanced chips. There's several generations. Well, I won't say this anymore. Intel's caught up on the process technology, but in terms of capacity, they probably have 5x the capacity of Intel. And so
we have to defend Taiwan. Basically.
We have to defend Taiwan like it's the 51st state. There's no other way about it. Okay, it can't be Switzerland, where they can build for everybody in the world, because we've cut that off. We said, you're not going to build TSMC. You cannot build for China. And furthermore, we said to all the semi-equipment guys, you cannot sell leading edge equipment into China. If China had its goal, its number one goal, it would be they would attract TSMC to build a plant in China at the very leading edge, so that they could build leading edge AI chips in China, just like TSMC does for NVIDIA. And in this game, if you're 2 or 4 years behind, it doesn't matter how much silicon you throw at it, you will not catch the leading guy, which is NVIDIA, right? So everybody's going to base all their AI work on either NVIDIA or some of these ASICs that Amazon does with Broadcom. But in general, this is what China would ultimately want to have. And we're denying this to them, okay? This is a huge deal. If they don't get access to leading edge technology, they'll never be a threat defensively, you know, armed forces wise, and they won't be a threat to the leading edge servers or PCs or phones that we build currently. One other thing about the tariff thing is, in regards to NVIDIA, they build the chassis in Taiwan. They can outfit them in Mexico. What I've read recently, those will not be hit with tariffs. And so if NVIDIA is not hit with tariffs, and today Trump announced he's going to let NVIDIA sell their old chips into China, which they stopped before, then NVIDIA is going to have a lot of upside here. So the whole tariff game is really going to come down to, you know, like I was saying, the dichotomy where, hey, your silicon is going to be tariff-free versus your completed product coming in from China using those free tariff-free silicon. What are they going to be tariffed at?
Right. So what you're suggesting is that there could be some political sleight of hand to declare victory. Is that what you're saying?
I'm saying that the Trump officials could go, there's a negotiation between the customs officials and Apple. What's the cost of this unit coming in? And if the customs officials say it's not $400, it's $30, then the whole tariff thing, then Tim Cook's got an out on the tariff front.
Right. Yeah. Okay. So that makes sense. And again, and then I can envision a time where Trump would allow these escape doors for some of the people he likes and likes to do business with. Right.
Yeah. One of the leading semi-analysts that I follow says it would take 5 years to get Apple out of China, completely
Okay,
out of China.
so tell me this. So now you talked about Taiwan Semiconductor. How feasible is it to build something in the United States, whether it be them, if we provide incentives to the people who run that company to make those chips here? Is that reasonable or no?
So TSMC's had met with Trump, right? And they announced they're gonna invest 100 billion in the U.S. Each fab is at least $20 billion. Okay, and what's interesting about TSMC's model is they get Apple, who's 25% of their business, and NVIDIA, who's going to be 20% of their business, to prepay for the capital expenditure. So they go to Apple because they're on the leading edge. They say to these guys, hey, you want us to build wafers? You have to commit upfront to giving us prepayments on wafers that are going to come out down the line. Intel does not have this with its customers. All right. So the difficulty with Intel was the CHIPS Act was never going to be big enough. In order for Intel to compete, it would have had multiple CHIPS Acts. And that's what Gelsinger was trying to pull off. But Trump basically cut that down. He said there's no more CHIPS Act.
So I want to read two comments. First, Widge, he says the dimmer switch is the perfect analogy. And then, so there. Yeah, Luis, can you put that one up real quick? And then the next one I'm going to read from Tim. Tim, just so you know, this is Ed. I don't think Tim was here when we introduced you. Tim says 100% agree on the defense of Taiwan. Does your guest think China can reverse engineer on ASML EUV lithography machine?
Look at you go, Tim. Deep dive.
Yeah, I had a hard time reading that. He's going to have to freaking answer it.
Yeah, ASML is another guy. You could stick them in there with NVIDIA and TSMC as most important companies. The latest I read is they have a 10-year lead on China. These EUV machines sell for like $300 million each, and they're the size of a bus. They have to be completely disassembled, put on an airplane, flown over to Taipei. They're built in Netherlands. And then when they get to Taipei, they have to reassemble everything. And you have to have a ton of technical people there to put it together and then to calibrate the machine. These fabs typically take a year or two to come up. So you can see where the prepayment from Apple and NVIDIA is way ahead of time from when they're going to get their actual wafers out. This is a huge commitment. And for Intel to thrive, they're going to have customers like that come to them and say, here, we're going to prepay for your fab or prepay for wafers. And the numbers I've seen out of Intel, this is going to be a really hard chasm to jump, is there's still negative cash flow in their foundry business, significantly negative. And to turn this around is going to be a huge effort.
So the first thing I want to ask you, this reminds me of when people would say, if oil prices go up, they'll just turn the spigots on. And if they go down, they'll just turn the spigots off. And I'm out there screaming at the top of my lungs. It's not that fucking simple. You don't just turn a well on and start producing oil, right? You got to hire people back. You have to explore new territories. You have to actually re-drill them and re-pipe them in order to get the stuff out. So it sounds to me like people, and I'm not saying Tim is doing this, I think people in general say they're just going to reverse engineer these. You're saying it's quite a bit more complicated than that. Am I right?
They usually, the way the Chinese do is they invite somebody in their country, they get a copy of the piece of equipment, they get the technical help from the company, and they try to pull off all the data and information as they're trying to assemble this. So it's not an easy chore. You know, to your question about turning on and off, Andy Grove wrote the book, Only the Paranoid Survive. His paranoia was building a fab and having it sit empty. It's the worst thing in the world. And he ran his business model at Intel of constantly keeping the fab capacity over 90%. And if he did that, then Intel would have huge profits, huge cash flow. But if he fell below, capacity, then you get eaten up by the CapEx.
So tell me this, and this might be a bad question because it might be proximity bias considering your background. When you look at these trade wars and the tariffs, are you basically saying that when you look at China's and our relationship, chips are so much a bigger deal than pretty much anything else. Correct?
I believe that. I don't know what the breakdown is on the dollar value, but it's hugely significant coming out of China. So the way I look at it, if you look at Foxconn's revenue right now, it's like $200 billion. Okay. That means they go out and they source all the parts that Apple has required to put into the iPhone. If Apple gives them the parts, then the revenue of Foxconn would drop dramatically. You see what I'm saying?
Yes.
They're acquiring several $100s worth of parts to put together into a phone and then ship it back to Apple for $400. So they recognize $400 in revenue. If they're getting all these chips for free, then the really, if you break everything apart, the amount of real dollars or contribution add from them is a lot smaller.
Bobby?
Yeah. So let me ask you something that might be a strange question for this context, but considering your background, what is your thoughts on the long-term health of something like Bitcoin? And again, this is probably off your expertise a little bit, but I feel like you might have insights deep down in that brain of yours as to whether there's a flaw here that people without your background aren't noticing. Because it sounds to me like you're able to point out, I was just looking at the Intel chart where you were talking, looking at the ASML chart, looking at the NVIDIA chart, and they're all doing the same thing. Like they're all moving in the same direction as if they're perfectly correlated. And you're explaining why you're explaining why they may not be. So that struck me as to ask you about Bitcoin.
Did you see ASML's up today while Europe's down?
Yeah.
That's huge. So they're really tied in, not into Europe. They're really tied into the whole SOX or index.
Right.
I own Strategy, not Bitcoin. And I bought it more so for an outlier.
MicroStrategy, right?
MicroStrategy, yeah. I bought it as an outlier. So like you guys know, let's say the federal government goes crazy and Europe goes crazy, they print a lot of money, right? Then I want to have a protection.
Is that a possibility? Huh. Yeah, no, I know, right?
You guys know this more than I do.
Well, we scream about this shit. I'm not making fun of you. I'm just being ironic, yeah, because I literally have my whole a quarter of my portfolio is they're going to do something stupid with the stewardship of the dollar bullshit, and that's why I've been making money on it with my Bitcoin. But anyway, you go on.
Right, and so my investment strategy for the last 10 years, it's been a kind of similar to this. Is I stayed basically into tech, into semis, because I had the similar thought like 10 years ago. Hey, what if the government just prints a lot of money?
Yeah.
You know, what should I own? Well, you should own an asset, right? A cash producing asset. The thing about semis that I really like is every 2 years, there's another Moore's Law cadence. I mean, there's another process technology that comes into the fab. And that means twice as many transistors on a chip. And with the new chip that comes out, NVIDIA has the wherewithal to dial in the prices they want based on demand. And you're seeing them hit margins of 70%, which is better than what Intel had in the 90s. And I've had friends that worked for Jensen at NVIDIA. And one friend worked very closely, said, Jensen really believes if he really starts to monetize the software, that he can get over 80% gross margins.
Wow.
And this is astronomical. This is at Intel, we were in the 60s. A good year was you were 60 to 65% gross margins.
Yeah. It's crazy. You think, all the money you've made, it looks like you're in your basement somewhere. I see pipes behind you and shit. Is that, don't you have a good studio?
No, that's my bookcase.
Oh, okay. I'm sorry.
That's my restoration hardware bookcase.
Oh, I thought you've been killing it. Oh, there's two things I want to do. Luis, first, can you put up the banner? And then after I talk about the banner, Bobby, when we goodbye, Ed, can we break down a couple charts, like maybe Apple and Nvidia, just real quick?
Sure.
Luis, put up the banner real quick. Let's talk about it, guys. So we appreciate the support you guys have all given us on this show. There's one favor we'd like to ask, and I'm not even sure if it's you doing us a favor or us doing you a favor, because you can get 3 months of Tradier Pro, which is absolutely the highest end options trading platform, easy to use even for beginners, and good enough and sophisticated enough for the most sophisticated options traders. 3 months for free. All you have to do is, what do you call that thing where you hover over the thing with your camera? What is that called again?
Hover over the thing.
hover over, if you take your camera and you hover over that thing,
Scan the
and then it
QR
clicks
code,
the
old
little
man.
yellowy boxes, and then
Scan
you
the QR code.
scan the
old
QR
man.
code. That's
Jesus Christ.
You're still trainable.
yes, exactly. Scan the QR code. I invented that technology. But anyway,
Yeah.
do that, and we appreciate all the support you guys giving us. Back to the conversation, Bobby. What do you got?
One last thing I have for you from a perspective of what happened today, since you obviously have had a lot of experience traveling to Asia and going back and forth. Who do you think? I hate to use the term blinked because it's not really what I mean. But who do you think blinked and blinks? Do you think China feels like they need the US? Or do you feel like in their culture of business, they're like, no, we're good on our own. We're doing a favor for you.
Oh, I think they definitely need the U.S. There's no doubt.
Do they think that?
Oh, I certainly believe that.
Okay.
I really do.
That's
And I think, I view it as there's a lot of communist CCP officials who, I'll give you an example. These guys I mentioned in Taiwan before, like Quanta and Foxconn, they were lured over to China. So some Chinese government official gives them free land, go build the building, and we're going to get a cut of everything you do. So it rolls back up in the Chinese party. The dollars roll back up, and in return, we'll give you labor that's $1 an hour instead of $3 an hour over in Taiwan, or whatever the number was back 20 years ago. All this transition happened after they entered the WTO. So the Taiwan guys moved the facilities over to China. So it's important to remember the Taiwan guys are the supply chain drivers. They own the supply chain. It's not China guys, okay? And these guys work closely with Apple, TSMC, NVIDIA, and they will figure out how to optimize the channels going forward based on this new tariff. And I'm assuming Vietnam ends up at 10%, Taiwan's at 10%, India's at 10%, but China's probably above 25% and not to go lower. And like I said, it could be dialed up and down depending on whether China is a good boy or not a good boy with regards to Taiwan.
That's a great answer.
And if we hold Taiwan away from them, they will never catch us.
That's awesome. But they might have a problem with that, and that could erupt into something a little more pressing in the short end. You know what I mean?
It's a tricky deal, pulling everybody out. It's like a military maneuver, retreating all your guys without getting shot.
Exactly. Yeah. So you said Apple, and Bobby, I don't have the date on Apple earnings. I don't know if you could. Do you see that anywhere? But you're looking at Apple earnings. What's that? May 1st?
I think it's May 1st.
Okay, good.
I will confirm that. Keep asking.
I'm coming back from Italy that day, but I would like to trade them because I do have a
it's May 1st.
If you are looking at Apple and you gun to your head right now, take a flyer on it, is it a flyer to the upside?
I would say this. Tim Cook has gotten his way with Trump so many times. I've got to believe he's got a hatch to get out from underneath the tariffs.
I agree. I think he might. Yeah.
The other thing I sent in a note to you guys, what does Samsung do? Samsung actually builds in Vietnam as well. So for Apple to compete with Samsung, they have to get under the same 10% tariff rule, right? They can't have 10% for part of their production and then the other part be at whatever, 100%.
No, because then Samsung would be eating their lunch and Trump can't have that.
Yeah.
Last question for Ed. No, go ahead. Finish your answer, and then I got.
No, I think if Tim Cook goes down, Trump won't let this go down. If Tim Cook goes down, it's a big mark against Trump. There's no way.
Oh, that's a great point.
Yeah. What do you got, Bobby? You said one more question.
Yeah, it's from Tim. Tim says, Ed, when did Intel lose their edge? It seems the one CEO chose financial engineering over real engineering.
This is like a 30
play on words, right?
This is like a 30-minute conversation.
We got 30 minutes left. Heck. Go ahead.
Okay. It started in the late 90s. Grove retired in 97. And he handed off to a guy named Craig Barrett, who was a manufacturing guy, but not a product guy. And then it was passed along to Paul Adolini. There was a famous story about Paul Adolini meeting with Steve Jobs. Steve Jobs said, I want to build my iPhone chips in your fabs. And Adolini had his finance guys do all this work. Adolini was a finance guy. He had all his guys run the numbers, and came back and said, we're going to lose money if we do this, right? Go a couple years later, iPhone takes off, Ottolini's kicking himself, and he gets interviewed, I think by the Atlantic or something, and they said, well, as you review what you did with Jobs, was that really going to be a money loser? And he said, no, afterwards we figured out it wasn't going to be a money loser. So he's like,
swing and a miss.
that's like the fork in the road, because that drove Apple to TSMC, that drove TSMC up, and TSMC has been, first they gained Intel and then they surpassed Intel. And then in the late, 2018 or so, Intel was struggling with the process technology. Something broke down where they couldn't get it to work. And so they were always behind from that point on. And they're now just trying to catch up, but it's taking billions of dollars to do so, to catch up to here. The problem again is that TSMC has existing customers who will prepay for CapEx. Intel does not. So,
makes sense. So what I wanted to do now, Bobby, I know you said that Ed only had about a half hour. We'll goodbye him, and then let's do a quick breakdown of some of those names, because this is a trading show. Is that cool?
Yeah.
So thank Ed. This has been absolutely enlightening. I totally appreciate this very much.
Sure.
Everybody, I sometimes go in front of cameras and talk about like I know about everything, and I oftentimes do not. That might not come to us as a surprise to most of the people who are watching as well, and Bobby would agree. But now I might feel like I'm a little bit further along on this thing. And by the way, I think this me on TV talking about how this is all about chips and all about China, and I won't give you credit, but I'll give you credit here loudly.
Sure, no problem.
I actually want to point out that we may have discovered Ed, because he said, yeah, I've never done this before. We had a call earlier to make sure his setup was right. And he's like, yeah, I've never done these before, but this might be fun. I'm like, we may have discovered Ed. So if anybody out there, we don't monopolize guests. If you like our guests, reach out to them. Ed, what's your Twitter, man? So everybody can follow you.
At Edward McKernan.
Yeah, it's awesome. At Edward McKernan, you put a lot of stuff out on Twitter. It's mostly just discussional things. You usually don't initiate on Twitter, correct?
Yeah, I usually follow up, or I forward stuff that I think is very interesting.
I love it. Yeah, good. And thank you so much. That knowledge, the people who are boots on the ground in these sectors, this is invaluable to me. My brother is a semiconductor wholesaler. He's Avnet. I'll be sending him this as soon as it's packaged up, because he'll love this episode. So hopefully we're attracting people within your business. So,
cool.
Thank you so much, Ed. We'll see you soon.
Guys.
Okay. Yeah.
Bye.
Bobby, you want to pop up a chart, just because this is a trading show, right? Let's do a little bit about trading. Because, by the way, this is I am very long Apple, and I want to know what to do.
All right. Well, I'm going to put this one up first, and for a very specific reason. Okay. Hang on, give me a second. And Luis, as soon as I get this up, please.
So funny. I wasn't even pressuring you, but when you're me, everybody thinks I'm pressuring them all the time because I'm hyper.
No.
And yeah, so
I know about your diagnosis. We're fine.
Exactly right.
So this is the Qs, or the NASDAQ, whatever everybody wants to call it. And I got this circle here that I'm now expanding and moving around the death cross, right?
Yeah.
And I've put it up on the Slice app, where we have our newsletter. For those of you that want to check it out, links in our bio, mine and Jim and Mike Arnold's. The death crosses are terrible indicators. They're hardly tradable, right? Because for those of you guys that don't know, the death cross is when the 200 simple crosses over the 50 exponential, right? And
you said that backwards, right? The 50 crosses the 200. The 50 moves more nimbly,
50 crosses under. I said the 200
crosses.
Oh
yeah, I got you. Yeah, the 50
the green one is the 200, right?
Yeah. Okay.
And these are steamships, not speedboats. They take a long time to turn and to intersect. So when they do, it doesn't happen all that often. Well, it happened, right? It happened basically. It looks like it lines up for about April 2nd, maybe April 3rd, somewhere around there. So what I've told people that have asked me, because I've had a bunch of people reach out, death cross, right? Death cross. I'm like, they're terrible trading instruments. So for example, if you sold the day after the cross, you would have sold the open on April 4th, and you'd have stopped out massively right now.
You've been wearing it, right? Yeah.
The problem is most death crosses, you get a rally to the intersection, okay? To the area where the cross intersected. And from the point we're at right now for like the close of the Qs, That's about 5-6% away from here to here. Okay. So there could still be a rally and then we could go down and extend. And just to show you what that looks like, I'm going to drop back here to the last time, I believe it was 2022, when we had a death cross. All right. And I'm going to show you exactly what happened. We're coming up on it now. You can see the 200s above the 50. There it is.
Bingo.
Right here. Okay.
Yeah.
This was the death cross, right? Happened on about February 18th of 2022. If you would have sold that, you would have gotten stopped out somewhere in here. Here's the rally up to the intersecting point, and then there's the subsequent move of about another. I mean, I could probably measure this out pretty quickly. If you go from this particular sale, let's do it here, okay, just to be fair, down to the low of this move, it was another 26.7% lower from the intersecting point. Right. And also, if you measure from, like, let's say where we tested it and it failed to the point in time when it, let's take it from here, just as an idea of where it's going to go, from the point in time where you get a golden cross, which is the 200 crossing back below the 50, or the 50 crossing back above the 200, which happened right here. You're talking about 227 trading sessions.
Okay.
So basically about a full trading year that you had this extension lower.
Yeah.
Now, does that mean it's going to happen here? Of course not. It's not what it means, right? But just the fact that we rallied up one session and rallied up big doesn't mean anything. I'm going to show you one more thing, okay? Just show you one more thing.
I have a question about this chart, which I think.
Well, ask me the question while I pull this other thing up.
Okay, so if it goes back and settles above where it crossed, it would also be above those highs from, whatever, few bars ago. I can't, a little higher than that. Yeah. So right. So if it settled above there, it'd be kind of killing two birds with one stone. And I would say any strength after that is to be bought. Do you think that's reasonable?
I think in this particular case, you need strength, test, and hold. Okay. I don't want to pull the chart all the way back, although I could. But the last time this happened, you had a close above there and you had subsequent strength. And then you had a test, strength, and then a collapse again. Okay. So you just have to be really careful. You can only fully say we're back bullish when the 200 gets below the 50 again, right? Because that means the two long-term moving averages have said, okay, we're back on the bull. That doesn't mean that we can't rally past there. It doesn't mean that you can't bottom feed. It's just not what I do.
And by the way, it is one indicator. You know what I mean? Bobby looks at about 20 indicators, but this is one that's very, very interesting. Yeah.
I just like to put this one up. Okay. Now I'm going to show something else. I'm going to present this. You don't have to take this down yet, Luis. I'm just going to show this thing really quick here. Now, I'm probably going to have to zoom in on this, right? It's too small to see.
You can make it bigger.
Yeah, I can. I just don't know if I will. Hold on a second.
Yeah,
okay. Because I just want to be in this highlighted area here, right?
Right.
Okay.
No, but I mean, on my touch screen, I can make it bigger myself.
Oh, that's okay. I just made it bigger for everybody, right? You guys can see this now pretty well. Okay. Yeah. This is the last 3 times we had big percentage moves in the NASDAQ, either equal to or more than today. Look at the dates. 12/5/2000, January 3rd of 2001, and October 13th of 2008.
So just what Bobby's saying here, that's the tech wreck at 01. So we had great up moves despite the fact that things were getting demolished, and the we both hate calling it the great financial crisis, but whatever they call it. Yeah.
Essentially, these were rebounds from sell-offs that then continued lower again.
Right.
This, by the way, David Settle put this on his Twitter.
Oh, so if you don't, we like David Settle. He's a good man and a good analyst.
Great guy, good analyst. That basically he put this up saying, because there were a bunch of people talking about what a great rally today was, and essentially he said, "Hey guys, don't think that today's rally necessarily mean things are going to get better, because look at the dates on these last few rallies." Right, where things got substantially worse after this. KG said, what tool did you use to measure that move? KG, there's a tool on TradingView. I could probably put the chart up again and show it to you. I've had this on my screen for so long that I'm not sure I can even find it for you real quick. But let me just share that chart again. Where is it? I'm so quick with this because I'm so good with technology.
Technology, yeah. Old men are always good with technology. Yeah.
It's this thing right here, okay? And this measures sessions, and then, you you just double click 67 bars, you can see it says, and then this measures percentages, and it also lists out the amount of points, but I don't care about that. I only care about percentages. But I believe that it's in here somewhere. It's either in this one or in this one. And I pulled it out. Oh, here it is. Price range and date range. See this?
Yeah.
Price range and date range. It's on the sidebar right here. And I don't remember how, but I was able to pull it out and put it here because I use it so much.
Okay.
So
let's can we break down Apple real quick? That's the one I care about. We can be done. Same chart, right?
Basically, here's your depth cross.
Yeah.
On Apple, right? So essentially, I expect easily a gap fill here over the next couple of days. I think that you'll have a solid gap fill. Let's look at the weekly because you're long a lot of Apple, not for a trade, right?
Oh, no. It's investment, certainly. Yeah.
Here's the good news. It held the 200-week moving average. That's really good news. All right. Because if it gets below and closes below, as a matter of fact, I don't think Apple ever has gotten below the 200-week for any significant period of time. Yeah. So I think it's pretty solid here. But if it closes below that 200-week, so that would be a Friday close, it's new territory for Apple because it's never done that. So I'd be like super careful about, at least hedge it with options, which you do pretty well. You know what you're doing.
As soon as you showed me the chart, I think it's going to fill that gap too. And when it does, I will be on guard to be buying some put spreads against it.
I got my camera in the way of my chart here, so I keep kind of moving sideways.
Other people are watching. I just got a new fancy camera, and I hope it makes me look professional. It doesn't make me look any younger, I noticed, but whatever. Yeah.
Apple needs to do a lot of work, and we can actually look at the last time that it closed below the 200, which is this is the 200-day.
Yeah.
Right. And we use that same tool that KG just asked about. The last time it closed below, it was below for about 48 trading sessions. Okay. And so far it's been below the 200-day for about, I could probably count this easier than I can measure.
Probably it's like six. Yeah.
6. So I don't need the tool for that, but just like everything else.
So by the way, I love you, KG. I know we sometimes get after each other on Twitter. I hope you know that I enjoy Twitter sparring. It makes me happy. So thank you for that.
Yeah. Let's put up Tim's comment, Luis, real quick, because Tim is asking about TLT. And we actually, on our newsletter, we put a potential long on that trade, but it honestly did not trigger in the way that we had it set up. Okay. Because we had, and you can see, I still have the entry levels and the targets and the buy on here. So this was the close. And we basically said that if it gets down here, we'll buy it. But we also qualified that with, if we open below the 200, we don't want to be in it. Right. Yeah. So that TLT long didn't actually end up happening. This particular chart, if somebody came to me and said, "Hey, Jim, I want your fundamental on this too." Okay. If somebody said to me, I kind of want to buy the TLT, where would you buy it? This couldn't be more of a neutral chart for me. Yeah. Okay. It's just literally like you look at this entire area right here. Like I know Mike would call this a shake and bake. And that's kind of
above and then below. Yeah, right.
Yeah, it's kind of a pattern that he invented. So I want to, somewhere in here, there's a horizontal price channel thing. I think it's right here. I'm better at this when nobody's watching. Here it is.
Damn right.
So we'll do a parallel channel. We'll use that. So essentially, you've got a channel like here. All right. And then here. And what Mike calls a shake and bake pattern is a breakout and then a move back to the middle and then a breakout lower. This is the shake, and the bake is the actual move in theory.
Right.
So if this doesn't break back into the channel convincingly, okay, it's likely to turn and accelerate even lower and probably even break these lows, quite frankly. KG said, ha, 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 for sure, Jimmy, just so you know. KG, he's not being genuine.
I am too being genuine. And even there are times I genuinely get mad, but we get mad all the time. You know what I mean? It's not a big thing when I get mad.
Which sees a head and shoulders here. He says, scale that out a few years. You talking about a head and shoulders or an inverse head and shoulders wedge? It's a crazy head and shoulders. I mean, I could put it in a monthly chart. That'd help. Definitely help pull it out a few years. Oh, I see what he means.
Oh,
Shoulder, head, shoulder. But this likely extended to its target. And now I can actually see a shoulder, head, shoulder, but a failure of that. So he sees
fundamental breakdown
on the rights. What do you want?
Fundamental breakdown. So here we go.
Yeah, go.
First of all, the what the fuck move from 3.79 to 4.26. I know I might be getting some of those numbers wrong. That was eye-popping.
What's the yield symbol, Timmy? What's the futures yield symbol, real quick?
I have no idea. I'm sorry.
All
I
right,
think
all right.
it's TYQ. Try.
All right, go.
Okay, but anyway, so if we can, we can see the yield. It would be cool. But if we can, that's fine too.
That's
so
right.
Anyway, we shot the yields up to 4.26, which started all this kind of loose chatter about what the hell's going on. And one of the theses is that perhaps China is, punishing us. Perhaps it's a move away from globalization, which makes people less likely to hold our bonds. But why did it happen all at once? Makes me think there's something nefarious going on. That being said, so here's the two things and you said the chart looks neutral. I think the fundamental picture is completely at odds with each other too. Because on one side, obviously we're going to have a lot of bonds to sell. If China's selling along with us, that could push prices down, yields higher. There is a level of yields where the Fed will quietly come in and start buying our bonds, particularly if they think it's a national security thing, if places are turning against us and selling them. Bobby and I have talked about where that level is. Bobby and I and Luke Groman, Jim Bianco, we've all talked about it. I think that level is about 5.25. That doesn't mean I think we'll go up to about 5.25. I think it means that the risk return is less as we start to move higher. And I think these two are fighting against each other. I have no trade in 10-year yields right now.
Something seems off to me about this chart. I mean, it's saying the 10 years are like 568.
Well, then something's off. Maybe you got the wrong.
There's a continuous chart.
Remember, they're a rolling 1-month contract. So it's April. Oh, and shit. It's just the April contract is what we're trading now. What is that you got?
I don't know. This looks like the spread.
Why don't you just get like a 10-year yield chart?
Oh, I think I put up a spread chart, to be honest.
Here, that was the wrong chart. Yeah.
Yeah, it's not like, here we go. This should be it. There we go.
Bingo. Yeah. So that move to me is pretty amazing how it shot up in so few days like that and then kept back down into the range. So I think this represents two kind of equal forces right now pushing at each other. What do you see in that chart?
I see a failure at the 50. And also to me, it's like, I think the next few days tells us what's happening with yields. But it's interesting because there's all this talk now about the unwind of the basis trade.
Yeah,
I'm not sure how I feel about that. I used to cover guys that did basis at the Board of Trade when I was there. And they didn't really do, like, it was pretty locked in. Like the second they did the trade, they had profit. There was nothing to unwind. Like they were hedged and the profit was locked in.
Right.
So I don't know. I
don't understand completely too. And I know there have been times
something out to read about it because I don't think it's accurate the way that they're reporting on it. I just
and I have mixed emotions on it too. I know there have been several different times in my career, if memory serves, that have been somewhat of an expert on the basis trade. Right now, it's not one of them. Again, 38-year career is a long time to forget things. I mean, the 10-year treasury yield, I mean, it's basically being long the cash and short the future against it, right? I don't see, well, but anyway, yeah.
Thanks, KG. I found it, but I should have looked at your comments.
Tim, I agree 100%. I think they're in the world hurt. So that's why I think there's somewhere below that where the Fed doesn't allow it to go. So I said 5.25, but you'd easily be right. Maybe it's 4 3/4. So we shall see. Yeah. All right, you want to call it?
Yeah, that's it. Let's look at one more thing
real
quick.
By the way, while he's getting this chart up, guys, thank you for your support on this show. It is amazing. We sometimes talk about things we talk about on this show and cross-promote it on the Slice app where we have our weekly newsletter. Please check it out. I think you guys will like it. We talk about the show on there all the time.
This is something that interests me right now. MicroStrategy stock. All right. Now, I'm not
a leveraged Bitcoin play.
What's that?
It's a leveraged Bitcoin play.
Yeah.
So you either trade this or I'll just pull the pin in a hand grenade and put it in your hand. And you can decide.
That's why I kind of wanted to bring this up.
Okay.
I will trade MicroStrategy, but I don't think I'll own it because I just own Bitcoin.
Yeah, me too.
Like, what's the difference? You know, you own a little bit of MicroStrategy or you own a lot of Bitcoin. It's very similar to me to the whole attitude of, or the whole idea of, you know, what's 100% correlated to Bitcoin.
And it has 30% swings regularly anyway. Yeah.
But we're approaching something that I really like. So Mike and I do this thing that we call trade trend lines. And they're slightly different than other trend lines. I'm going to have to zoom in on this to show it to you. So basically, trade trend lines only need 2 points. Okay. They don't need 3 like a traditionally taught trend line. And those 2 points are the initiating point and the defining point. And that's it. Okay. So here's the initiating point and here's the defining point. And when the trend line breaks, okay, you have a very high probability in the range of 65%. Close to 70% that you're going to hit the defining point, which is the high of MicroStrategy on March 25th. Okay. So if it breaks somewhere in here and continues to remain above these moving averages, which are flat, so they're not that dominant in terms of resistance anyway. If it breaks up to here, you have the possibility for a quick MicroStrategy trade that might be somewhere in the range of 14% higher on the stock.
Not insignificant.
Not what you're going to make. But that's the move in the stock. Okay.
Right.
But if it gets above there, it then takes a very rocky path to the open of the initiating point,
which is
the high of it. Okay. To the open of the initiating point, which should be right around here.
Yep.
Okay. Now, what kind of a move is that?
That's a big money move.
That's like a move from here to here, which again, percentage in the stock, 74%. Again, not what you're going to make on your trade, but I like this. Now, I've talked about putting some sort of trade on here on our newsletter, which again, you know, if you follow Jim or Jim, I don't know if you have it in your bio yet, but I do.
I do.
If you go to mine or Jim's Twitter, you can see the newsletter in our bio.
Oh, no, I don't. I have it in my pinned tweet. I don't have it in our bio. Yeah. Okay,
and the pinned tweet is fine, or you can get it out of my bio on the newsletter. If I talked to Mike about putting a technical one up, and Mike did this. Mike's a very ethical guy. He did this 15-minute rant. I don't want to hold MicroStrategy. They're terrible. It's a disgusting play. I can't stand that company. But yeah, trade is fine. But first, he had to let me know that the company is completely unethical and like for us to recommend anybody. We're not recommending any investments to anybody.
Right. If people who argue, and again, we're Bitcoiners allegedly, but there are people who argue that Bitcoin's a Ponzi, and I will argue and come back with that. Everything that trades over its intrinsic value has a Ponzi element to it. A stock that's trading, you know, on future earnings that we perceive are going to be 10 times what they are now in 5 years. That's somewhat of a Ponzi too. If Bitcoin's a Ponzi, though, Microsoft Strategies is a Ponzi on a Ponzi. I said if. So I stay clear away from it.
Yeah. So
let's bring it on. Please join us on our newsletter. We'll continue the conversation there. Thank you to Tradier for having us. This is always such an awesome time. Thank you guys for being here. Remember what Bobby and I's mission are. We were in legacy media for a long time. You can't give your honest opinions in legacy media because there's always a sponsor looking over your head or producer looking over your head who has an agenda to drive. All our agenda is to have some fun, talk about trading, make some money. And I think we're doing a pretty good job of it so far, but it's because of you guys. And thanks for all the support you give us, the retweets, the DMs, and you guys are the best. This has been Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino, and we're the same height exactly.
No, we're not.
Yes, we are.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.